Hello everyone, this is Joshua Hayes at BigWayTrading.com coming to you with the December 4th report that you can use for tomorrow's market or the market next week. It really doesn't matter because the market's really not going anywhere. And to show you that, we can see that since the October 10th move to now, we are down about negative 6% on the S&P 500. It's really not going much. So since 1010 to 1204 in about 2 months, we really haven't gone a whole lot of anywhere. But during that time, we are still trending down. And like I continue to tell you, we continue since June to stay below the 50-day moving average, and we can't just get above it. I mean, we tried in August a little bit, but we really couldn't. NASDAQ we didn't, but in the S&P 500 we tried but couldn't hold. And as you see, after the small rally that I told you in the short term, we can't get even sub-intermediate term or intermediate term, bullish until we even get above the 50-day moving average. So as long as S&P 500 refuses to get above the 50-day moving average, we're still in a bear market, folks. As you can see, volume getting lower and lower and lower. And it's good to see it low on the pullback like today, but it's not good to see the rally going along on lower volume. This can be shown obviously also in the New York Stock Exchange Index and in the Dow Jones Industrial Average. As we'll show here, as you can see, lower and lower and lower volume. Now, what is good is since the November lows here on the DJIA, we have tails in almost every session except for the negative session here on 12/1, which was a holiday, post-holiday session. So we have a lot of tails showing up now in the Dow Jones Industrial Average. Now let's go take a look at the NASDAQ. See the same thing. NASDAQ is still well below the 50-day moving average, and as you can see, lower volume on the rally. Tried to jump yesterday. Nice pullback in volume today on the small 3% decline. Overall, in the past 3 days, NASDAQ's up 3, but in the past 4 days, it's still down 5% since the post-sell-off. So things aren't that great here, and I don't know why people are that bullish really right here. My problem also is I had a new long yesterday. Not perfect. Base needs to be much longer, but still very strong in this market. It didn't work today. It hasn't completely failed, but the fact that it didn't go up immediately tells me that the market isn't ready to rally. If the market's ready to rally, these beautiful chart patterns that have nice stock patterns are going to break out and continue to go immediately, and they are not going to pause. They're not going to wait around. Hopefully the one that I went long bases out some more and it can break out and go, but I'm already going to get out 33% of it. It didn't go up right. It's still within the intraday range of yesterday, so it doesn't amount to a 50% sale, and it's not below the 50-day moving average, so it's not a 100% sell to teach some of you how I go about holding my longs. But the problem is this market still is not above the 50-day moving average, and you just can't get excited about a market that's not above the 50-day moving average. I mean, heck, if we just go on the short-term time frame here from the lows, you're only up 14% from the lows off the 1120 bottom. But from the top in the Russell 2000, which is what we're using right now, you're still down 48%. So compare your 14% gain to your 48% long-term capital gain, and you'll see that the smart side was the short side for the entire time. So I don't know why everybody's still bullish. I just wouldn't be bullish right here yet. You know, just give it some time, let some volume come in. Also, another thing, VIX can't stay below the 50-day moving average. It's been above the 50-day moving average since September. This extremely huge amount of VIX proves that the market is still very skittish, but there's still not enough fear via the put call to match the VIX to say that we're going to go higher. So this huge volatility tells me that we're still too frightened out there. We don't want to rally. When we break below the 50-day moving average hard, not like this, where you get bullish tails at the end of the day, then I'll be a little bit more bullish on the short term. But right now, with new longs failing, new shorts failing, and nothing of the long-term shorts telling me to fully cover, I can't say that it's time to be long at all. I'm not giving any full covers and long-term winners, not getting any new longs that are working. And I can't say it's time to be right by going short right now either, because brand new shorts are clearly not working. You're hitting me for small losses, which is not terrible, but they add up after a while, and that's why now my worst account is no longer down 7%. It's now down right around 11%, and why my at one time almost 40% gain has dropped back down to a 23% gain. So it's just what we have to deal with in this market. I know a lot of people are doing a lot better, but I know people that have had huge gains have seen them come in. And what's funny is that right now you can't go long or short anything that's working, unless you're day trading ETFs, and if that's your game, congratulations, it's not my game. I want to show you some commodities here. Gold fell today 1%. And it does appear that it's rolling over below the 50-day moving average and wants to continue the downtrend. So I do think that the November and October lows will not hold. Platinum is holding, but also has a sign. As long as it wants to stay below the 50-day moving average, I could see the lows breaking on this in October. The same goes for silver, as silver is holding the lows, but at the same time can't get above the 50-day moving average. And if gold can't hold it, why would silver or platinum? So it's something to be considerate of here, as these indexes are very weak. Now let's look at the everyone's bearish on the dollar index. And as you can see, since the flag breakout, it's still slightly up. And since taking the 50 and 200-day moving average, we still have a 16% gain in this index as itself. It's still bullish, still above the 50-day moving average, still printing tails on the days when it is down. So why people are that bearish on the dollar, I don't understand. When the dollar does roll over and go below the 50 and then definitely goes below the 200, then we can start screaming bloody murder that the dollar stinks, and we can go long gold, I would assume, if something like that would happen. But until that happens, there's no way I'm going to freak out right now. Now, I want to show you China stock market, the Shanghai Composite. Now, I want to go up to September. What you don't see here on TCNet, sadly, is the volume. Volume during the September rally was very strong. Volume during this October pullback was lame. Volume on this move right here was strong. It was decent on the follow-through day here on 11.5, and since that follow-through day, it's up 13%, the index. Volume was very strong on these moves here, and now as you can see, the Shanghai Composite Index, it tried to take out the 50-day moving average here. But since it was not building on higher lows, as you can see, lower lows from September to October, it didn't hold. But this recent pullback has made for lower lows. Now that we're above the 50-day moving average, we now have higher lows and slightly higher highs. So let me do a trend line to actually show you this, to show you the slightly higher highs. You see the uptrend there, and you can see here the uptrend there. So that shows you that it's trending up now instead of trending down like it has been ever since the top in 2007. And this index was one of the worst hit indexes, as it fell a nasty 70% plus from the top, right around 72%. So to see it rallying here and doing it on strong volume, which we cannot see on TC 2007, is a bummer. But you can still see it here. And just if you go look at Bloomberg, Google Charts, or any charting service like StockCharts.com maybe, that will have volume, you'll see on the up days volume is very strong, while on the pullback it's low. And hopefully it's strong again today. I'm going to go ahead and wrap part 1 up there. Part 2 will follow this. I hope everybody's surviving this market. Remember, cash is king for this exact moment. Shorts aren't working, longs aren't working when they normally should be working whenever they set up in the patterns that they set up in. So I'll wrap it up there. This is Josh Hayes of BigWayTrading.com. Have a great night.